Alright guys, this is a new video. This is the video before the last video. I think everyone knows that the last video of the strategy is directional bias, but this video is about what we call a point of interest, or POI. Let me type it here for you to understand what I'm talking about. Point of interest. What is a point of interest? A point of interest is a place in the market where there is many orders as possible the market needs to be execute. Places in the market where the market needs to execute orders, and those points of interest are dividing into two. The first one is order block, all right, and the second one is breaker block. There is no a third point of interest. It will be only, or it is an order block or a breaker block. Okay, pay attention guys, this is very important. How does the order block looks like? The order block look like this. You see a bullish candle involving a bearish candle. A breaker block, you see a bearish candle involving what? A bullish candle. So this is what we call an order block. This is what we call a breaker block. And all those points of interest has things to do in the market. For example, let me go to the point. Okay, I want you to understand this topic because it's very important. What's the main function of the order block? Is to buy. When the market comes, it has the order block, the market will buy to the upside. What's the main function of the breaker block? Is also to buy. In a bullish market, when the market comes, mitigate the breaker block and it goes to the upside. And at the same time, the breaker block is also having the function to sell in a bullish market. How it work? When the market comes, mitigate the order block, it sell to the downside. Also, breaker block has the same. When the market comes, mitigate the breaker block and what? It sells. So for you to understand all of this is very important for you guys to understand the theoretical part before we go to the practical part. The practical part means that before we go to the real market, and the theoretical part means that I'm going to teach you first with these scenarios. Okay, so this is very important. Let me teach you where are the order blocks and breaker block located in the market. Let's say, for example, this is a bullish market. Okay, higher highs, higher lows, and everything. The order blocks in the bullish market are located in the extreme zone. Normally, most of the time you see them in the extreme zone. Okay, so their function, let me type order block. Order block. Their function is that the market will definitely come and mitigate them and push the market again to the higher, to the upside. Sorry, do you understand what I'm talking about? So order blocks, their function in the bullish market is for the markets to release a buy. Do you understand? So this is what we call an order block. Order block is normally located in the extreme zone. Order block, the extreme zone of a structure, just like this. Okay, this is what we call an order block in a bullish market. Their main function is to buy, is for the market to buy. So in those places are those places where we execute our what? Orders or buy limits in a bullish market. This is a case of a bullish market. Pay attention in those places, in those order blocks. This is where we execute our what? Our orders. Simple as that. Okay, very simple. So I think you guys need to take a picture of this for you to understand very well. Okay, now let's go to the breaker block also in a bullish market. We're still talking about a bullish market. Okay, let me do something. Let's just come here. In a bullish market, this is how a breaker block is supposed to work. In a bullish market, the breaker block are located in the top part or on the top level as this. These are the breaker block. You know that the order block are located in the extreme zone, right? Those zones. But the breaker block are supposed to be in the top of the structure. Breaker block, breaker block. What's their function? Their function is also as the order blocks to buy in the market. So from this place. But you need to understand that not all order block and breaker block are valid to buy. They have rules that we should follow. Wherever those rules, those rules are available for you, it means that you can use them, right? If the rules are not available in a typical point of interest, you don't have to use that point of interest to do anything. You only use a point of interest wherever take all the rules possible and make it worthy to use. All right, this is how a breaker block is supposed to be in a bullish market, and this is how an order block is supposed to be in a bullish market. This is a scenario of a bullish market. The breaker block are located where in the extreme zone of the structure, just the extreme one, and this is the order block, and the breaker block is supposed to be in the top level of the structure. So right now let's go to a bearish scenario. Okay, or the block in the bearish scenario. This is a bearish scenario. All right, okay, perfect. The order block, let's say this is a break of a structure. Okay, break of a structure, break of a structure. That's good. The order block is supposed to be here. It's like the inverse. Okay, order block supposed to be here at the top of the what of the structure. This is an order block. What's their job? Their job is to make sure that the marker will sell from those levels. Do you guys understand what I'm talking about? Simple as that. This is the job of an order block, to make sure that the market will do what? Market will sell at those levels. So the order block in a bearish market will definitely make the market sell, but the order block in a bullish market will definitely make the market to buy. Do you understand? So as this one is a sell scenario, this is where we place our sell limit. Simple as that. Okay, pay attention. I think this video maybe will take like maybe 40 minutes or 30 minutes, because this is the most important part of the strategy. This is sell. This is a order block, a scenario in a bearish market. Now let's go to the breaker block, a scenario 2. I think you can see this very clear, right? No, in a breaker block in a bearish scenario, it's supposed to be like this. Okay, this is a break of a structure. This is also a break of a structure. This one also what? A break of what? Structure. And the breaker block is supposed to come here. Pay attention. The breaker block is supposed to come here. Okay, let me type it for you to understand and for you to see very well. This is very important for all the traders. Okay, this is what? A breaker block. This is what? A breaker block. A breaker block in a bearish market is also there to do what? To sell the market. Means that those points of interest will definitely perform according to the market direction. If the market is bullish and you have an order block, the order block will buy in the market. Why? Because the market is bullish. But if the market is bearish, the order block will definitely sell. Same as breaker block. So all of them as scenarios. So guys, this is very important. You can see, right? Easy as that. So no complications. We have another block here and a breaker block here for a bullish market. You can see that those POIs are for there to buy in the market, and we also can see that we have a bearish breaker block and we have a bearish order block, and those POIs also are for what? Are to sell in the market. So depending on the market directions, you take an order block or a breaker block. And right now I want you guys to see the rules for the POIs to be valid in the market. Okay, let's go to for the rules. The first rule says that there should be a market structure or a double break of a structure. This is the first rule. So for you to take a point of interest that can be an order block or a breaker block, first of one, that point of interest should have what? A break of a structure or a double break of a structure. The second rule says there should be what? An inducement. Very important. So the inducement should also be there. If you find a break of a structure or you find a double break of a structure but you don't find the inducement, don't take any point of interest. It means that don't take any order block or breaker block. There are 4 rules that of those points of interest need to meet before you take them. All right. The third rule says there are 4 rules. It's not too much. We are going to the third rule. The third rule says the point of interest, or let me just put POI. The point of interest needs to be what? Unmitigated. It means that that point of interest should be a point of interest that the market has not touched before, that the market has not used before. What's the meaning of that? It means that, for example, this is a breaker block here. Okay, if this is a breaker block and the price has tapped into that breaker block, means that that breaker block is mitigated. It is not valid anymore. It means that it should be a point of interest that the market has not touched before. That point of interest can be a breaker block or order block, but the market shouldn't be used before. It should be a clean point of interest. Okay, let's go to the last rule of the point of interest. You say you pick the point of interest. Let me put it POI. point of interest nearest to the inducement. Those are the 4 rules. Pay attention. For example, okay, let's go. This is a break of a structure. Okay, you have the first pullback, that is what? The inducement. Okay, is this one. Oh guys, so this to be very easy, I want to make it very big. So let us copy this and let us delete everything. Okay, because we are coming to do this very easy. Let us put the text around. God, what is that? Oh, let me go back to the time again. Okay, I think oh, it's not possible or what? Okay, let's go at the top. These are the rules. Pay attention. Okay, let's go to the rules for you to see how you people should manage it. Let's say this is a break of a structure. Okay, this is the first pullback, the inducement. Okay, simple as that. Okay, this is what? A break of a structure, a boss. Break of a structure. So we have those. You have 2 types of POIs. The first one is the breaker block, that is here. The second one is the order block, that is here. Okay, this is how you locate them in the market. The breaker block is at the top. When you're talking about a bullish market, the breaker block is at the top. The breaker block and the order block comes, or the blocks come in the extreme zone of the structure. So what does the rule say? The first one say there should be a break of a structure or a double break of a structure. We have a break of a structure here, this boss. So the first one has been okay. The second one say there should be an inducement. You have our what? Inducement, that is what? The first pullback. Inducement, the first pullback. Okay, the third rule says the point of interest needs to be what? Unmitigated. It means that need to be the one that the market has not used before. Between a breaker block and the order block, those 2 points of interest, which one has the market used before? You can see clearly that the one that the market has used before is this breaker block. Okay, because of the inducement. Why? The inducement came and touched the breaker block and went up. So the 4 rules say you pick the point of interest nearest to the inducement. If this is the inducement, which point of interest is the nearest one that made that let's say that take off those rules? That point of interest is this breaker block. The breaker block is unmitigated and is the point of interest that is nearest to the inducement. So it means says that we are taking our buys on this what? Order block. So the market will definitely come to our order block and buy to the upside. Have you seen? I hope you guys are getting the point. Let's go back to the time for you to understand very well. The first rule says there should be what? There should be a break of a structure or a double break of a structure. And we have here a break of a structure. Okay. The second one say there should be an inducement. We have the inducement, that is what the first valid pullback. Okay, there are two rules that have been okay for now. The third rule say the point of interest needs to be unmitigated, means that it needs to be a point of interest that the price has not touched before. And between the order block and the breaker block, which point of interest price has not touched before? It is this order block, because that breaker block has been touched by the price, that is the inducement. Do you understand? So the fourth rule says pick the point of interest nearest to the inducement. This is the point of interest that is the nearest one, the closest one to the inducement is this order block. So this is where you put your buy limit in a bullish scenario. So the price will definitely come there and buy. Do you understand right now? Let's go again in a different scenario. I want you guys to pay attention, guys. Pay attention on these rules. We are going to a different scenario. We are talking about buys for now. Buys. Let's say something like this. Okay, this one, the first rule says there should be a break of a structure or double break of a structure. In this scenario, we have what? We have a double break of a structure. Simple as that. Okay, simple as that. You have the first one that meets. There should be a break of a structure, or there should be what? A double break of a structure. In this case, I am seeing a double break of a structure here. The second one says there should be an inducement. We also have the inducement here, that is the first pullback. Inducement. The inducement is the first pullback after market structure or after a double break of a structure. So there are right now two rules that are going well. The third rule says the point of interest needs to be unmitigated. How many points of interest we have here? We have first this breaker block above here. We have also this breaker block below here, and we have this order block here, and at the same time we have this order block here. So we have four different points of interest. Some people will be surprised about this one, but this is also a breaker block. Okay, this is a breaker block in a bullish market. This is also a breaker block in a bullish market. This is an order block in a bullish market. This one is also an order block in a bullish market. So the next rule says you pick the point of interest that is nearest to the inducement. So if this is the inducement, what is the point of interest that is nearest to the inducement? I can see that this is the breaker block that is nearest to the inducement. The first breaker block. Let me type it. Breaker block. Okay, so the price will definitely come and buy from this breaker block and go above. Do you guys understand? All right, pay attention in this one. You can take a picture of the screen for you to analyze very well. I recommend you to download these videos in the highest quality for you to understand very well. Okay, when you talk about learning about trading, you need to spend a quality time, because we're talking about money. It's not simple things. Okay, let's go in a different scenario. This is a breakover structure. Okay, breakover structure. Oh god. Okay, no problem. The first rule says there should be a breakover structure or double breakover structure. In this place you have a breakover structure here. Okay, we have the first rule. Okay, what's the next one? There should be an inducement. we have our inducement, that is this first pullback. Okay, we have the inducement. Good. The third rule say the point of interest needs to be unmitigated, and if we take well here, we have what point of interest? We have this breaker block, and we have what? This order block. Okay, so price has never mitigated this breaker block before. You need to pay attention. Sometimes price doesn't mitigate any POIs, and you see that. What's the next rule? You pick the point of interest nearest to the inducement. What's the point of interest nearest to the inducement here? The point of interest that is nearest to this inducement is this breaker block. Is the nearest point of interest to the inducement. So the market will definitely come and do what? And buy from this breaker block. Just easy as that. Okay, let's go again for example of double break of a structure. Okay, because I want you to see all the examples as possible. Let's say we have a previous bearish market, and we have double break of a structure here. The first rule say there should be a break of a structure or a double break of a structure. All right, so we have here a double break of a structure. Okay, double break of a structure. Okay, the second rule says there should be an inducement. Okay, we got our inducement here. Simple, right? Very simple. Simple to follow. You don't have to complicate too much. After this example, we go to the real market for you guys to see how it works. And the third one said the point of interest need to be unmitigated. How many points of interest we have here? We have this breaker block. Okay, we also have this breaker block below here. We have this order block also, and we also have this order block at the stream zone. So what point of interest are we taking? We are taking the point of interest that has been not mitigated. The point of interest needs to be unmitigated. So this breaker block has been mitigated or has been touched by price. So you pick, the four rules say you pick the point of interest nearest to the inducement. So the point of interest nearest to the inducement is which one? Is this breaker block above here? Oh, below, sorry. Below here. This is the point of interest that you are taking. If this inducement came to, let's say if the inducement was here, let me bring it. If the inducement was here, it means that I should have picking the point of interest, the one that is below the inducement, because the price, the rules say pick the point of interest that is closest to the inducement. So if this is the inducement, I'll pick the point of interest in this order block. If the inducement was here in this also order block, I would have come to this zone because it is the nearest one as possible. Now let's go to the real market. I think all of you have been waiting for this. Let's go to the bullish scenario first for you guys to understand. Okay, we have a break of a structure here. Okay, we also have what? There is a small break of a structure in this zone. Let me show you, but you see it only on lower time frame, like maybe like 30 minutes, 15 minutes, because right now I'm in 1 hour time frame. But you need to understand that there is no specific time frame for you to trade. Okay, so let me go to the 15 minute for you to see the break of a structure I'm talking about. So all the time frames are valid. Okay, that's the break of a structure. You can see the break of a structure, right? This break of a structure. So let's go again to the 1 hour. So we have what? A double break of a structure. That's the first rule. The first rule says there should be what? A break of a structure or a double break of a structure. Let me bring the lows around here. Okay. This is very big. Let me put it in 22. All right, maybe 24. Okay. You say there should be a break of a structure or double break of a structure, and we have our double break of a structure. The second rule says there should be an inducement. An inducement is the first pullback. So the first pullback is which one? The first pullback is this guy. Let me show you the first pullback. This is the first pullback. This one here. You see that the price make a double break of a structure and the price came down with this black candle and also went up again. Okay, it went up to take out this last high. So that's the pullback we need, the inducement. Okay, so the third the third rule says the point of interest needs to be unmitigated. How many points of interest we have here? We have this breaker block here. Pay attention. This is a breaker block. We also have this breaker block here. We also have this breaker block here. So there's many breaker blocks in this trade. You see breaker blocks, right? So which of those points of interest are we taking? The first, the fourth one say pick the point of interest nearest to the inducement. So if you check well, this breaker block above here has been mitigated by the inducement, so it is not valid because one of the rules say, the third one say the point of interest needs to be unmitigated, and this one has been mitigated by the inducement. You see that the inducement came to mitigate that price and use it. Okay, so we are taking the point of interest that is closest to the inducement. What's the point of interest closest to the inducement? Is this next breaker block below here. Do you understand? Is the one that we are using to watch to take our buy. Simple as that, guys. Very, very simple. This trade is 1 to 11. Have you seen? This is the first example of double break of what? Of a structure. All right, let's go again to look for another example. Okay, another example. For example, let us come around this place. Let's go to 30 minutes. I'm going to different time frames for you guys to understand and to see that there is no specific time frame for you guys to trade. Okay, all the time frame works. So let us come here. The first rule says there should be a break of a structure. A break of a structure is also a market structure shift. Okay, so you don't have to worry too much. This is a break of a structure, or it can be a market structure shift, no problem. Okay, pay attention. It can be a break of a structure, or also can be a double break of a structure. Okay, you have the first break of a structure. The second rule says, let me bring the rules. Rules. Now come on for here. Nigerian used to say come on for here, something something like that. So we have the first rule say there should be a break of a structure or double break of a structure. We have a break of a structure. Okay, The second rule says there should be an inducement. The inducement is this one. Pay attention. Let me go again into the chart. This is the inducement. Okay. The inducement is this guy. Why is this guy the inducement? We are coming. This guy is the inducement because we have a breakover structure with this. We have breakover structure and the market drop with this candle and went up to take out this zone. Okay, so we have the valid inducement there. You need to be very careful when you are looking at price, because trading is not made for us to make money, it's made for us to lose money. So you need to be very intelligent, because we are trading the same market as the big institutions, right? So those people are intelligent, and you guys need to be also intelligent to see those difference. So we have a breakover structure here and the market drop and went up again. So this is the first pullback, the first inducement. And we have 2 points of interest here. The first one is this breaker block, and the second one is this order block. Do you guys see? Say the third one say the point of interest need to be unmitigated, and we see the point of interest here, the first one that is mitigated by the inducement. So what point of interest are we taking? We are taking the point of interest closest to the inducement. Is the first rule. Pick the point of interest nearest to the inducement. So the closest to the inducement is this order block, is the one that has not been mitigated before. So this order block is the one that we are taking our buys. You see how it makes all the requirement for you to take the buy, right? Simple as that. This is 1 to 6. It's also a buy. Okay, let us come to the next one. For you to trade on this one, you need to be very intelligent. Okay, you need to understand price. The first breakover structure, this is the first rule. There should be a breakover structure. So we have a breakover structure here. I think you can see the breakover structure. Please pay attention. This is the breakover structure. Let me type it. This is a breakover structure. You have the inducement, that is what? The inducement, it is this guy in this place. Let me write it. We are going with the rules, and we pick the point of interest that has not been mitigated. We have this breaker block above here, and we also have another block here. Let me go to 15 minutes, okay guys, because I want you to see this very good. There is another block here, but this example will be very complicated for you to understand right now. Okay, so this is where you tell you this order block is visible on 5 minute time frame, but let's go with the examples that are very clear, okay, for you to understand, guys. For example, this is a what? Is a double breakover structure. Okay, this one, we have a breakover structure here, we also have a breakover structure here. So we have a double breakover structure, and the first rule say pick the point of interest that is worth, there should be a breakover structure or double breakover structure. We have the first rule. The second rule says that there should be an inducement valid. So this is the inducement. Okay, and now the third rule says that there should be the point of interest, it needs to be unmitigated. All right, so let's go with the point of interest. How many points of interest we have here? We have this breaker block, we have this breaker block also. I can see this order block, or breaker block is inside this point of interest, so it is not necessary for us to use it again, but it's also there. I want you guys to know that that point of interest is also there. At the same time, we have this order block. Okay, so between all those POIs, which one are we taking? This is the inducement, so we are taking the point of interest that is closest to the inducement. So what is the point of interest closest to the inducement? Is this guy. This is the point of interest, this breaker block. So this is where we take our bias limit. So guys, let's go to the next one. Okay, for example, here we have a breakover structure. Okay, we have an inducement. Okay, how many points of interest you have here? You have this point of interest. We also have this point of interest here. So what is the point of interest that we are taking? We are taking the point of interest that it is unmitigated, and at the same time it is the one nearest to the inducement. So this is the inducement that has been mitigated, this breaker block. So the point of interest nearest to that inducement is this order block. So we are taking our bias in this order block. Okay, simple as that. So you just, guys, this is 1 to 12. So let me show you the most recent one. Okay, because right now gold is selling, so I want you guys to see what I am talking about. We are going for a double breakover structure. Okay, let's do something. Okay, today is only for bullish market. The next class will be for bearish market. Okay, so let's look another example. Another example. Okay, like example this one, very easy. Okay, pay attention. We have a breakover structure here. The first rule says there should be a breakover structure or double breakover structure. We have a breakover structure, and we have the inducement here. You can see the inducement, right? How many POIs do we have here? We have this breaker block, and also we have this order block. So we take the POI or the point of interest that has not been mitigated. What's the point of interest that has not been mitigated by price? This order block, because we see that this inducement price use it or mitigate it. So we are going for the order block. Easy as that, no complications. Okay guys, no complications. The next one, what does it say? We have a double breakover structure around here. This is a breakover structure, and we have also here a breakover structure. I think you see this breakover structure in a lower time frame. So we have a double breakover structure. So where's the point of interest? Oh, where's the first pullback? This is the first pullback. Okay, you see that this is the external breakover structure, and above we have what? The first pullback. It means that price, this is the structure, price passed the structure, make the pullback and went up. So we are taking the point of interest that it is nearest to that pullback, and at the same time the one that price didn't mitigate. We are saying that this breaker block here has been using by the price, but the one the price didn't mitigate is around here. I don't know if price will allow us to go back to that place, because I think it's very far, but let's see. We can. I want you guys to see the point of interest. The point of interest, okay, is around that place, guys. This is the breaker block. Okay, so let me go to 15 minutes. This is the breaker block. Have you seen, right? Okay, I think you can see it from here. We have also what, this breaker block here, and also we have this other block around here. This is the breaker block, this one. So we have four different points of interest, and this one has been used by the inducement. So it means that we are not going for it anymore. We need to go for the one that this inducement has not used before, and it should be the one closest to this inducement. So this is the breaker block closest to the inducement. Okay, so this is the second one. This rate is 1 to 7. Okay, so guys, let's go again with the double breakover structure. We have been using this one, so let's go again. We have what? We have a breakover structure here. We also have a double breakover structure around this place. Okay, where's the inducement? The inducement is this pullback here, and we are taking the point of interest that it is closest to that inducement to take our buys. So this is the breaker block, and this is a breaker block also, and we also have this breaker block, also have this other block below here. So what's the point of interest that we are taking? We are taking the closest one to this inducement. This is the first pullback, this candle here, this candle. So we are taking the point of interest in the what? In the breaker block. Easy as that, very easy. And we take our buys limit. This is 1 to 10. Okay, should we continue? Right, we have taken 3 trades that meet all the requirements or all the rules. If you see any trade that don't meet those rules, just leave it. Easy as that, guys. You have a double breakover structure here, this first breakover structure and this second breakover structure. So we are taking the inducement above the external breakover structure, and we are taking the POI that has not been mitigated, that is this breaker block. Have you seen? Easy as that. For example, let us continue. Okay, this is a breakover structure. Okay, this is also a breakover structure. Okay, what's the next? We have the inducement here. This is a double breakover structure. Pay attention. The first rule say there should be a breakover structure or a double breakover structure. We have a double breakover structure. The second rule say there should be an inducement. We have our what? Inducement. The third rule say the point of interest needs to be unmitigated. Means that the point of interest needs to be the one that price has not used before. And you are saying that there is this breaker block, there is also this breaker block, and at the same time there is what? This other block below here. So I've seen that this inducement I've used this breaker block, so it is not valid. X. This one is also has been used. So which one are we taking? We are taking the other block because it's the one that the inducement didn't mitigate. The 4 rules say pick the point of interest closest to the inducement. Easy. So you guys don't need to overcomplicate the process. We have taken 4 trades. You find, guys, this is important, you find many trades as possible around here. For example, let me show you. For example, I think this one is only if you go in the 5-minute time frame, but believe me, there's a break of a structure here. Okay, there is an inducement here, and there is what, and there is a order block just below. Oh, this is the inducement. Let me show you. This one, this black candle below. Okay, so some of you would have hit a stop loss here, because let us be clear, this place has been used. So the nearest one is this one, and price didn't come there. Okay, so why does this happen sometimes? Because in the market sometimes you have a mis-entry. Okay, you don't control the market, you trade what you know. This is important, guys. You have to trade what you know. For example, you have a mis-entry here, but at the same time you have a break of a structure here. Okay, you have the inducement here, and we have this breaker block, and what else? We have this order block. So the breaker block has been mitigated by what? By the inducement. So you take your buy and the order block. Sometimes you have mis-entry, no problem. Sometimes you hit SL, no problem, but you need to have a strategy that works, and it should be a strategy that you have been testing many times. How many times you have taken here? In this one we took 3. This break of a structure, this other break of a structure, we took this break of this one, we took this trade. You are taking this, I think 6 trades in only this, following our rules, just in this small 15 minutes time frame. We are taking 6 trades there. We are not talking about bearish right now, we are only talking about a bullish one. For example, let us come here. Okay, guys, this is a break of a structure. So this one is also a break of a structure. So we have what? We have a double break of a structure. We have the inducement here. Okay, this is a double break of a structure. What is a double break of a structure? Double break of a structure is when the market take out more than one consecutive zone. So means that there should be one zone that has been taken out, a second zone, it can be a third zone or a fourth one, no problem. The most important thing is that the market needs to take out an external break of a structure. And you see that we have double break of a structure. We also have the inducement. And we are taking the point of interest that is closest to the inducement. Which one is it? We have this breaker block. We have also this breaker block. We have also this breaker block below here. And for the last one, we have this order block. So what's the point of interest that we are using here? We are taking the point of interest closest to the inducement, which is this breaker block. Have you seen? Easy. Guys, easy as possible. This trade meets all the requirements for you to take the trade. This trade is 1 to what? This is 1 to 9. This is 1 to 9, guys. So guys, this is all for the video of today. Next class, I will be talking about a bearish market and how to take their POIs. In a bearish market, the rules are the same and the structure is the same, but I will just do it for you to see how it looks like. Okay, for example, I will just give you one example of it. All right, for example, what we have a break of a structure here. Okay, and we have what, a point, we have the inducement in this place. Okay, so we can see that we have a break of a structure, price went up and went down again. So this is our inducement. So in this place we have the breaker block that has not been used by the price. You see the inducement, and that breaker block is unmitigated. But don't worry, I will develop this part in the second video. Okay, so this one is a clean trade. Normally this is 125. So guys, I will also teach you where to place your entry and your exit entry. It means that where to put your stop loss and where to quit your trades. Okay, so don't worry, let's see the next video. God bless you all.